Hey, good morning, everyone. Hope everybody had a great weekend. So Monday, let's get right to it. So you can see futures are kind of chippy. Let's go ahead and share screen here. We're using Market Watch now, guys. Just as a little advice, we got off the CNBC website. It's just too much, I don't know, nonsense. It's very childish, and it's not enough information, not enough accurate information for us. We're not interested in opinions. We're looking for data. And Market Watch gives it to us. So we're going to start using Market Watch. You can see futures for the Dow. And we like this green here too, guys. So for you guys out there, you newer traders and stuff that are looking for good free tools, Market Watch is great. And I'll show you why as we do the recording. But you can see futures are up real big and stuff. Interesting morning. They came out of the gate real strong. We're about 20 minutes from the bell, and the Dow's up about 355. The S&P's up about 43. The NASDAQ, another 163. We'll see how we open up, guys. We know how we opened up on Friday, right? And we opened up on Thursday with those big green days. And Friday just vomited it all over itself. It looks like a dead cat bounce here, guys. And I'll show you on the chart what I'm talking about. Everybody's focused on that 10-year 10-year event right now, right? The 10-year yield. But you really look at this, guys, it popped up to 1.6, and that scared the market, right? And we got that big sell down. And it came back down a little bit, right? And everybody started buying the market Friday morning. Well, it didn't do anything from there, and you saw that market just sell off. If you look at that 10-year note, right now it's still at about that 1.4 1.45. The most recent quote is about 1.45. You just take that and move the decimal over. It hasn't done anything. If you look at a 1 month chart, it's actually still in a very bullish move. We'll see how rates act today when the market's open. Okay, guys, like always, we don't tell the market, and we don't try to guess, and we don't try to time. We let the technicals tell us what to do. We're still just sitting on those three option trades. We've got a VIX short in case the market blows up. We've got that spider put, which actually went a little bit profitable on Friday, or when the selling Thursday, when the selling was down. We're going to hold on to that because we think this might be a little dead cat bounce follow through. But ultimately, we'll let the market tell us. Let's go look at a chart for the S&P 500, the spider. So you look at this spider chart, right, guys? We've charted it out. We went back and we found support, resistance. We built bars. And you see all we've been doing after we made those highs a couple weeks ago, all we've been doing is churning here, right? Big green bar, big red bar. Big red bar, but it couldn't take out that high from the other bar. So you can see the spider's up at about 385 in pre-market. 385 still won't take you up and out of that channel. So let's see if how much move is behind this. It still looks like a market that's on weak legs. If you go with the 1 minute chart from Thursday and Friday, let's put Thursday and Friday right here. So that's Thursday, right? And that's Friday. If you look at Thursday, go back to the open right here. See how we popped up real nice and it just sold down. Well, that was that rate freak out, right? And then all of a sudden rates settled down. You had Friday, right? We popped up and then we kind of ran, right? Rates are better, rates are better, rates are better. Then a little bit of sag came in the market, and then the bottom came out, right? Some of that's probably people don't want to carry stocks into the weekend with all this stuff. Now, the stimulus bill is finally making its way through Congress. But the problem with that is, and it doesn't matter if you're Democrat or Republican, whether you wear a red jacket or a blue jacket or no jacket. The fact of this stimulus is it's about 91% pork now. 9% of this actually addresses COVID. That's the $1,400 checks. Your PPP and whatever community help they can give right now. Obviously, community help's not as important as building the rail in Hawaii. So first of all, I wanted to say, from all of us in Hawaii to all of you on the mainland, thank you for paying the $87 million we couldn't find in Hawaii for our rail. And that's just one example of this bill. And that's what I tell you guys. Leave your politics and your ideologies aside. This is all about data. And data has no political affiliation. You know, you've got rates which are climbing. The 1 month rate on the 10-year shows you that. In fact, let's go back to an old favorite, CNBC. And I'll show you that chart. Let's pop on over to CNBC. Gotta spell it right. We pop on over to CNBC, guys. Let's pop on over to those bonds. You see that 10-year chart? That's a 1-year chart. Look at that bullish move since August, right? Since August. And then if you look at this, kind of calm it down. This is your last 1 month here, guys. And let's start with 1 day, okay? You see how that was your Friday, right? They tapered down, tapered down, tapered down, and everybody was real happy. But if you look at a 5-day chart, you can see we started here and we ended up higher, right? You look at a 1 month chart, even more definitive, right? We started here at the beginning of the month and we ended up here. So you see how, remember what I always teach you guys about moving averages, your short moving averages and your long moving averages, right? You always need your short moving average, right, to move first, your 50, your 20, depending on what kind of chart you're on. And that will dictate what your long moving average does over the future. That's what's happening. That's how it happens. In that 1 week microcosm, in that 1 month microcosm, you start seeing the change of direction. Other than that, guys, you know, I don't know how this stimulus bill is going to affect things, but I know that they've already got another bill they're working on, a spending bill, and that includes a tax increase. So, and they're going straight after capital gains, which is you as a wealth builder. So, you know, we'll see how this shakes out, guys. Always root for America. And it's like Warren Buffett says, don't ever bet against America. We'll see how it shakes out. Right now, that's not a good thing, but you never know. The economy is reopening. We saw the last 2 unemployment reports did fairly well, which is good. There looks like a little bit of curvature starting to build on that continuing claims and new claims chart. So that'd be nice if we could start getting people back to work. And that's the key right now. People don't need, I know people don't like it when I say this, but we don't need $1,400 cash. We need the economy open. So we need activity. We need normal stimulus, natural stimulus. We'll see how this shakes out, guys. You know, it's an interesting day. Before I let you guys go, we'll be bringing another stock of the week tomorrow. We'll do that on Tuesdays. We did it last Tuesday. We'll do it next Tuesday. We were talking about last week's CCI, right? Now, one of the reasons we went with CCI is, one, it gives us some nice tech exposure, right? We don't want to fall into that. We want to be like Buffett, but we don't want to fall into that anti-tech mentality. We know tech is where the growth is, right, in this country, and where it's big growth. So if we can get something that's got tech and it's got a great dividend and a great balance sheet, then we'll take it. CCI is the one. One of the reasons we like CCI is it's actually a slice stock on Schwab. That means you don't have to buy a whole share. If you're a smaller player, a new player, just getting started, you don't want you can't afford $160 stock right now. You can buy a partial share and get it started. There's never a bad time to buy a good stock. And we'll bring you another one tomorrow. And that's what we've been talking about, guys. We're still just sitting on 3 option plays right now. And we're just going to stay right there until we see some definition from this market. Really, it's just good, right? We're up 400, down 400, up 400, down 400. You want to day trade that mush, good luck. No, a lot of day traders are making money. A lot of day traders are losing money in this market too. So we'll just keep it slow and steady, right, guys? And then when we see our opportunity for options, we'll dive in there. For you guys following along, we're still in that VIX short. Right at that $20 strike. We still kept those spiders. They went a little bit into profitability for a moment on Friday, but we decided to hold on to it. We think there's more selling coming in this market. We'll see how it digests this open this morning. Again, don't put all your analysis early morning in futures, and I'll show you why, guys. and you see it in the charts. Futures up big, right? And then boom, the day just kind of takes over. Futures up big Friday, right? And then the market just kind of took over. It sold, people tried to buy, and it just went down. It's been like that. Futures, the way the market opens, it kind of takes its definition after that first hour or so. So be careful out there. Otherwise, guys, we'll be back tomorrow with another stock of the week. And let me just check here if there's any breaking news that we should talk about. Other than that, again, guys, let's see how this stimulus bill works its way. It's at the Senate now. Let's see what it actually encompasses when it's a final bill. These bills, as they go through Congress, guys, and I always teach the members this, don't get too excited about what first hits the table, because by the time it gets from the House to the Senate back to the House, it might not even be the same bill it left as. It might leave it well, like this one. It left as a COVID bill, it came back as a bailout. Again, thank you for paying that $87 million for Hawaii. Other than that, guys, you guys have a safe morning this morning. We'll get into it. Market opens in about 10 minutes. We'll see how it shakes out. We'll be back tomorrow morning with another report, along with the stock of the week. All right, guys. If you're looking for stocks, guys, go take a look at that CCI. It's a nice company, and like I said, all your brokerages, including Schwab, your bigger ones outside of Robinhood and stuff, are offering it. You can buy partial shares, so no reason to not get a little strength into your portfolio. A lot of people asking me about Apple. We have a good position in Apple, and we've held it since pre-split, right there, the pre-split. Apple's a buy around $120, $125. Apple is a strong buy. That's our belief. And again, remember the guy that bought Apple at 10, right? If every time the stock fluctuated, he had sold or panicked, he wouldn't have made millions and millions and millions, right? If he bought it and he just held on to it for 10 years, look at the money he made, right? And think about that when you're trading your good stocks. Don't be trimming is okay when they're nice big profit and you've got a big position. Your position's grown over dividends over time and things like that. Trim a little bit, take some of that profit, but definitely hold the position. It comes down, you can buy a little bit more at cost average into it. If nothing else, that thing sits in your portfolio and it collects dividends at a lower price, which brings your cost average down through osmosis, which is even better, right, guys? You can take that money and go play it on something else. Bitcoin. Bitcoin. Since we're talking about Bitcoin, let's talk about Bitcoin. A lot of our members in our live trading room, they play the Bitcoin. Bitcoin's back at 48,000. Kind of an interesting weekend for it, right? I was looking at it at one point, it was down to 46,000. Interesting, very interesting trade right now. Gold is an interesting trade too, right? It's up about $10 this morning after that blasting it took on Friday, right? It was down about 45 points. Are they buys? We're not sure. We're going to let this market define itself a little bit more before we jump into it. I give you an example. Visa. We were thinking about shorting it, and then it went up $6. Then we were thinking, well, maybe it's back in bullish mode. Maybe we can catch it on the upturn on another leg, and then boom, it was down $5. Then it was up $6. That's what you're dealing with. And remember your options, guys. Your stocks can weather these, but when options get caught in that washing machine, that churn, just up a little, down a little, up a little, the time decay kills you. Okay. So that's why we're not putting new option trades on the table right now until we see a little bit more definition, and we don't recommend that you do either. Trade smart out there, guys. Don't bite into every little news report you get. And let's see how things shake out. Okay. And remember, it's not a bill till it's a bill. All right, guys, we'll see you tomorrow morning. Thanks for watching.